The big news this past month, at least in my world, was this small time investor who you may have never heard of made some big buys that was announced. Almost every news outlet dealing with money reported that Warren Buffett made some major moves, which included him adding more Verizon and Chevron stock to his portfolio. Warren Buffett purchased a measly 146.7 million shares of Verizon, which comes to around $8.6 billion. Now, Buffett also added around 48 million shares of Chevron that cost him around $40 billion as well. However, for today's video, I'm not really talking about all the companies he added to his portfolio. I'm going to zero in on Verizon, which is a stock that I have already had in my portfolio for a while now because of its steady dividend payout. And I'm really going to determine if it's now's the time that I should be adding more shares to my portfolio based off Buffett's move. Now the big question is, why now did he buy all these shares and add it to his portfolio? Does he know something that we don't know? You know, the reality is we probably really may never know the exact reason why he does everything he does. But besides the steady payout of dividends and the steady growth it's had over the past couple of years, Warren Buffett may be onto something else. Of course, one of the reasons could be this. Verizon was one of several major companies that bid billions of dollars on the upcoming contract for the Federal Communications Commission's Auction 107, which ended on January 15th. The mid-band radio spectrum the carriers were bidding for will be crucial in their overall efforts to continue to build out their 5G networks over the next few years. Verizon initially had a bid of around $35 billion, but after it was all said and over, they ended up with a $45 billion gross bid, which is the largest bidder for this auction. The overall importance for Verizon to be the largest bidder on this was a risky move on their part. And in doing that, if they shore up and get the majority of this contract, which they have, it really kind of helps solidify them on being one of the major contenders with AT&T, which really is going to push them to the side, and really is going to be Verizon and T-Mobile in the efforts to really expand their 5G network. Of course, as you would expect when Warren Buffett buys $146 million shares of a particular company, the stock had a positive reaction to the news and was up over 3% in after hours trading and almost hit close to $60 a share. But since then, the price has dropped slightly back down and it's trading around $55 a share. You know, Verizon has been overlooked by a lot of people, not all, but a lot of people like on most popular stocks from Robinhood or Webull because it's not the sexy stock like Tesla. It's not the highly volatile stock like we see with Workhorse or Virgin Galactic. But the reality is they've been getting the job done each and every year. Verizon has been a slow and steady grower over the past 10 years, posting a modest 48% return. But as you can see, they haven't really experienced no major dips either. Chances are if you own a mutual fund or if you have a 401k, not only is Verizon in that fund, but it's probably one of the top 10 holdings within those funds. And one of the biggest reasons that people invest in Verizon, as well as your mutual fund and your 401ks, is their dividend yield. Currently they have a 4.6% yield that pays out an annual amount of $2.51 a share. Here's a fun fact for you. With Warren Buffett's new investment adding these additional shares to his portfolio, just in the 146 million shares he added, he is going to get a current dividend payout around $366 million just by owning those new shares. The financials get even better with Verizon that has posted a 16-year growth rate and less than a 50% dividend payout ratio. Compare that to AT&T that has close to a 70% payout ratio. As for me and my investment strategy, I typically like buying companies that have a dividend payout ratio of less than 50%, kind of like Verizon is right now. It really shows me that they're not overcommitted to paying the dividends and they have a decent amount of free cash flow to expand and grow the company. Think of if you have a personal budget or your home budget, free cash flow is everything that's left over. All your bills, all your necessities has been paid. That's one reason why Amazon has really been able to expand and grow at such a rapid pace over the past couple of years is because they don't pay out dividends and they're able to use that money to keep increasing and expanding the company. But Warren Buffett isn't the only person that is favorable towards Verizon. Analysts have had a good position on Verizon for some time now, while most are saying it's a good, strong, steady company. with overall stable financials. Even with all the COVID-19 struggles that most companies dealt with and most humans dealt with, Verizon was able to produce some overall good numbers in its most recent quarter 4 earnings report. In that earnings report, they was able to add over 700,000 net additions to the wireless network alone just in one quarter. Overall, they was able to increase their cash flow to $41.8 billion, up 16% from the same time last year. And then their free cash flow was up to $23.6 billion, which is huge for them, and as I mentioned before, huge for investors who like that nice steady dividend payout. Of course, when you compare Verizon to the other major telecommunication networks like AT&T and T-Mobile, Verizon obviously blows the doors off of AT&T. Now, I've done several videos on AT&T, and the only reason I'm still with them is because of their current dividend payout. But AT&T, unlike Verizon, has a huge debt problem that they really have to get under control. So for this video, Verizon really is only now competing with T-Mobile. Now, when you compare financials, it's hard to really compare them apples to apples because T-Mobile currently does not pay out a dividend, and which is one reason they're able to expand their network and really kind of be the leader, and which is why Verizon is trying to win these bids at the Auction 107 to really close that gap and be that near peer competitor with T-Mobile. Of course, almost everything Verizon is similar to its competitors. They also have a public safety sector which provides dedicated service to first responders and military personnel, similar to what AT&T has with their FirstNet program. While everyone has their own investment strategy and their plan, owning a stock like Verizon at the end of the day isn't a bad decision overall. With a steady company, steady growth, with overall good financials and a positive outlook, it's kind of a no-brainer to not only have this stock in your portfolio, but having it as one of your key ingredients in that portfolio to be able to weather the storms if you have other volatile stocks. Overall, I don't see any major red flags concerning owning this stock. Of course, putting up that $45 billion to win this Spectrum contract is going to increase their debt ratio. But I think with time, sometimes scared money doesn't make money. You have to be able to risk a little bit in order to gain a lot more at the end of the day. And of course, if long-term investing isn't in your strategy like Warren Buffett and you're in the stock market for a short-term play, I wouldn't really suggest Verizon as be a short-term play stock, because keep in mind they've only had a modest 48% growth the past 10 years, well behind the S&P 500 index. So let me know in the comments section if you're going to follow Warren Buffett and continue to add more Verizon stock to your portfolio. I would love to see those comments. As always, guys, thanks for watching. I hope your stocks stay green. I hope you stay safe, and we'll see you on the next video.